we are going to unpack one single, absolutely wild day where the global markets just went completely off the rails. We're talking record-breaking volatility, all driven by confusion, contradiction, and, you guessed it, the world's most critical commodity. And it all kicked off with this. After a really high-stakes phone call, a major world leader in a pretty serious conflict reportedly said these words to a journalist. And you better believe the markets, who were just desperate for some good news, they heard it loud and clear. But, and this is the crazy part, while those words screamed, "Peace is at hand," the actual data, the money moving through the global economy, was telling the exact opposite story. It was like the entire financial system had a split personality crisis, and it all happened in just a few hours.
I mean, just look at this. This chart really captures the sheer insanity. West Texas Intermediate Oil, that's the benchmark, posted its biggest single-day percentage gain in history. It soared 30% right at the open, but by the end of the day, it had completely reversed and closed in negative territory. This wasn't just volatility. This was one for the history books.
So what on earth just happened? You've got what sounds like a declaration of peace, immediately followed by the biggest energy price shock in modern history. How can both of those things possibly be true at the same time? Well, that massive contradiction, that's the mystery we're going to unravel.
So the key thing to understand here is that this chaos wasn't random. It wasn't just a glitch in the system. It was ignited by some deeply confusing and totally contradictory messages coming from the very highest levels of power. It created this insane feedback loop of panic and then relief, back and forth.
And here it is. This is the source of that whiplash. In a private conversation, the message was clear. Victory is just around the corner, the enemy is crippled. But then, just a few hours later, in a public speech, the official story did a complete 180. Suddenly, the war was nowhere near finished. Now imagine you're a trader trying to price risk. This is pure, uncut chaos.
And, as if things weren't confusing enough, the other side in the conflict issued a pretty sharp reminder. Their response, at least as U.S. political analysts saw it, was simple and direct. Hey, it takes two to tango. A war doesn't just end because one side says it's over.
So this political whiplash, it sent a direct shockwave right through the lifeblood of the entire global economy, oil.
16%. That's the number that absolutely terrified energy traders. With a critical maritime choke point basically closed for business, 16% of the entire global oil supply was suddenly at risk. We're talking about millions of barrels a day that just vanished from the market.
And we are talking about the Strait of Hormuz. This is the world's single most important oil artery. There's no way around it. The situation got so severe so fast that S&P Global called it the single biggest energy disruption in history. Full stop.
The panic was absolutely real. It forced governments to start looking at some pretty drastic emergency options. I mean, everything was on the table, from limiting their own energy exports to directly intervening in the markets and even releasing oil from their strategic reserves, which, let me tell you, that is a true break glass in case of emergency option.
But this was never going to be just about oil. Panic and confusion on this scale, it doesn't stay contained. It's like a virus. That shockwave quickly spread from the energy markets into every other corner of the financial world.
And you can see that split personality playing out right here. The Nasdaq stock index actually rallied on those initial hopes of peace, but at the same time you had this flood of money into what are called safe havens. See, when uncertainty spikes, investors sell risky stuff, and they buy things like government bonds and gold. Even Bitcoin, which some see as a kind of digital safe haven, caught a bid from all this chaos, shooting right past $70,000.
So why does one crazy day on Wall Street actually matter to the real world? Well, beyond all the flashing numbers on the screens, the real fear comes down to one word. It's a word that keeps economists up at night.
A stagflationary shock. This is the big one. It's the absolute nightmare scenario where a huge spike in energy prices not only drives up the cost of everything from gas to your groceries, but it also slams the brakes on economic growth. It's a toxic combination, a worst of both worlds problem that central banks have very few good tools to fight. And look, this isn't just some abstract threat. Analysts immediately started crunching the numbers, and they predicted a pretty significant hit to inflation across a lot of developed economies. As you can see, countries that are more dependent on energy imports, like Italy, were projected to feel the most pain, with maybe a full percentage point added to their inflation rate.
So as the dust started to settle on this truly historic day, one crucial question was left hanging in the air, and it was a question that was dividing analysts, economists, and investors about what in the world was coming next.
80%. According to one pretty prominent chief economist, this is where the market's collective wisdom landed. The market priced in an 80% chance that this entire energy shock, the biggest in history mind you, was just temporary and would be resolved quickly. That is a remarkable display of confidence.
And yet, that confidence, that 80% bet, it seems to fly right in the face of a fundamental truth that history has taught us over and over and over again. As one analyst put it pretty bluntly, conflicts are, by their very nature, unpredictable. Betting on a swift, clean resolution is always a gamble.
And that leaves us with the final, really unsettling thought that lingers after all the chaos. Are the markets right? Are they correctly seeing a clear path to a quick resolution that justifies that huge 80% bet? Or are they just being complacent, simply ignoring the massive, unpredictable risks that are still hiding in plain sight? That is the question hanging over all of us.